What's up, YouTube? This is Thomas from Thomas Invest and thank you for watching. Today I want to talk about Home Depot. On the 17th of August they are going to announce the Q2 earnings, so this is the perfect moment to do a review of the company. In this video I will show you some important statistics from the 10K file, the investor relations, do a fundamental analysis and give you different stock price scenarios and targets. If you're new to the channel, make sure to subscribe to get notified when I'm posting a video. I also appreciate it. Early thumbs up, which helps me within the YouTube algorithm. For now, let's dive into it. Home Depot engage in the sales of building materials and home improvement products. Its products include building materials, home improvement products, lawn and garden products, and decor products. It offers home improvement installation, services, and tool and equipment rental. In 2020, Home Depot had almost 2,000 stores in the United States. 182 stores in Canada and 127 stores in Mexico, which brings the total at almost 2,300 stores. We see that the amount of stores is increasing every year and that the US is representing the highest amount of stores, obviously. This is a big opportunity for them, the international market. In this chart we see several statistics from the 10K file, but the two that I find the most interesting are the average ticket and the sales per retail square foot. You want these numbers both to be increasing every year. The average ticket tells you something about average amount of money someone spends at Home Depot. We see that it's increasing every year, and in 2020 it increased a whole lot more than before. This has to do with the Roni virus. A lot of people spend more money on their home improvements. The next one, sales per retail square foot, tells you something about how much revenue is generated by every square foot. We see that this number is increasing every year, so that's also a good sign to me. In this chart we see all the product segments that Home Depot has. There were some interesting developments within these segments. The percentage of net sales tells me if a product segment is growing above or below the average growth of all the segments together. So for example, building materials has grown in net sales since 2018, but has decreased in percentage of net sales, so this means they did grow below the average growth of the company since 2018. Same story for electrical lighting, flooring, kitchen and bath, millwork, paint and plumbing. All these segments were growing below the average growth of the company. The segments that grew above average were appliance, decor, storage, hardware, indoor garden, lumber, outdoor garden and tools. Now that we know a bit more about this company, it's time to do a fundamental analysis, starting off with the PE ratio. Home Depot has a PE ratio of 24, which is too high and also a red X. This worries me a little bit because the amount of sales is up big time in 2020 versus previous years, so this means the company might be overvalued based on the best year ever. Let's find out. Home Depot has a profit margin of 10%, which is the exact minimum and also a check mark. For a company in this sector, I think this is a great profit margin. Check some competitors, Lowe's for example, and you will see a lower profit margin. Since 2016, the revenue of Home Depot is up 40%, so it's a big check mark. Please notice the big jump in 2020 versus previous years. As said before, a lot of people were improving their homes, so the revenue went up big time. Since 2016 the profit is up 62%, so this is also a big check mark. And it's of course similar to the revenue growth. But please notice that the profit is up a whole lot more than the revenue, so this means they do have better margins right now than they did before. I couldn't find the profit margins per segment, but it might be interesting to do some research and see what the margins are per segment. In the past 5 years, the return on assets and return on investments were always above 10%, so this is a big check mark again. I'm impressed by both numbers, to be honest. Home Depot is buying back shares in the past 5 years, so it's a check mark. For these type of companies you shouldn't expect any less. I think that any company of this age needs to buy back shares in order to create value for the investor. With the current ratio you want to check if the company is capable of paying their current liabilities with the current assets. You want this number sitting at 2 where 1.5 is the absolute minimum. Right now, the Home Depot has a current ratio of 1.11, so it's a red X. But I don't mind that much. They need to have big inventory, so it's hard to keep this number above 1.5. I think as long as it's above 1, there are no reasons to worry for this type of company. Free cash flow has increased by 100% in the past 5 years, so this is a big check mark. But it's the same story as with the revenue and profit. In 2020 they made a big jump. This is something to consider. Can they maintain this growth? As always, I will give you 3 stock price targets. A low multiple for slow growing companies, a mid multiple for average growing companies, and a high multiple for fast growing companies. We immediately see that Home Depot is overvalued in all the 3 scenarios. Looking at the growth number of the recent years excluding 2020, we see that the growth was there but not in double digits year over year. So I think we need to use a mid multiple in this case because Home Depot will continue to grow in the future but not in the same pattern as they showed in 2020. The mid multiple tells me that they are overvalued by 37% and need to drop to around $210 to hit a fair value, so it's a red X. To be honest, I love this company, but I currently don't own any shares. The fundamentals are great, the products will be needed in the future and they are a healthy company because of the revenue growth, profit margins, share buyback program, current ratio, etc. But the valuation of this company isn't that great. They are overvalued, so you might want to think twice before buying this stock. That doesn't mean the stock price is going down or won't go up in the future. So for now I will keep them on my watch list because of the valuation. But I love every other part of this company. Remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.